Hello and welcome to this lecture in which we will give an overview of program management. So at the end of this lecture, you should be able to understand the principles of budgeting and financial management, appreciate the process of developing and implementing resource management plans for public health programs, and explain how to improve programs to improve the public's health. So most textbooks on management, including public health management, make a distinction between leadership and management. And so leadership is, in essence, doing the right thing, whereas management is doing things right. So key leadership responsibilities entail articulating a bold vision and being externally focused on the changing landscape to position the organization in a strategic direction and to succeed in its mission, its vision, and its values, and engaging and inspiring key internal and external stakeholders to help achieve the organization's mission, goals, and objectives. The doing things right of management focuses on aligning and integrating internal organizational operations to the organization strategy and the strategic plan, its goals and objectives, and to drive performance excellence. And the Baldrige Performance Excellence Framework provides system-based self-assessment criteria and that supports an organization's ability to improve in aligning and integrating strategy and operations. And you can do some more research on this Baldrige framework. So aligning and integrating organizational strategic and operational goals, objectives, and processes requires strong program management skills, particularly those related to budgeting and financial management, and securing resources, and program implementation and evaluation. So this lecture focuses on the program management tasks of the Association of Schools and Programs of Public Health, ASPPH, that are critical for organizational effectiveness. And these um, tasks are categorized into three groups. Under budgeting and financial management, there is task one, which is to develop program or organizational budgets with justification. Task 2, defend a program or organizational budget. Task 3, operate programs within current and forecasted budget constraints. And task 4, respond to changes in financial resources. The second category is securing resources to support programmatic activities. And here they outline task 5, which is to develop proposals to secure financial support. Task 6, participate in the development of contracts or other agreements for the provision of services. Task 7, ensure implementation of contracts or other agreements for the provision of services. Task 8, leverage existing resources for program management. And task 9, identifying methods for assuring health program sustainability. The last third category is implementing, evaluating, and improving programs to improve the public's health. And here we have task 10, which is constructive feedback to others about their performance on the team. Task 11, develop monitoring and evaluation frameworks to assess programs. Task 12, implement a community health plan. And task 13, implement programs to ensure community health. And some authors describe such tasks as those related to driving execution and continuous improvement in public health, while others include them as public health financial competencies. So T.L. Friedman once wrote that a vision without resources is a hallucination. Organizations typically develop an operational plan for a given time horizon, for example, 3 years, and that flows from their strategic plan, goals, and objectives. They also engage in an annual planning process that focuses on the organization's upcoming fiscal year. A fiscal year is the annual time frame used for financial accounting purposes. For example, July 1st through July 30 or January 1 through December 31. Operational plans cascade down into sub-plans for departments within an organization. Similarly, specific programs carried out by an organization will have their associated operational plans. So operational plans require budgets, which are detailed financial plans comprising estimates of revenues or income, and that's money generated by the activities of the operational plan or received from resources and from sources such as grants. And then on the other hand, expenses or costs, which are monies being expended on resources required to carry out the operational plan. So the process of estimating the coming year's revenue and costs is called budgeting. And the budgeting process occurs annually to prepare for the upcoming fiscal year of the organization. Budgeting is the financial part of the planning process that ensures the short-term financial obligations of the organization are met, and the long-term sustainability of an organization is secured. So public health managers should be competent in developing organizational and program budgets. And budgets require detailed information on all revenues and expenses by category. And each category usually has its own separate line in the budget, which is referred to as a line item. And examples of revenue categories include money generated by charging fees to provide services, grants and contracting and funding, sales, investment income, and donations. Um, Examples of expense categories include staffing costs and fringe benefit costs, for example, vacation, paid time off, health insurance, supply and equipment costs, rents, utilities, printing, postage, and travel costs. Staffing costs are typically estimated on a full-time equivalent as FTE basis. So FTE staffing calculations typically assume a 40-hour work week or 2,080 hours per year. An organization's total revenue should exceed or meet total expenses. If they do not, then the organization has a budget deficit and is experiencing a loss, and this is not good. In for-profit organizations, the excess of revenues over expenses is called profit. In not-for-profit organizations, it is called margin. Hence, there is the saying, no margin, no mission. So public health organizations are typically not for profit. Therefore, profit maximization would not be a goal of the organization. Having a positive margin or at least a balanced budget should be the goal. A balanced budget means that the organization's total revenues are equal to its total expenses. So its margin will be equal to or very close to zero. The formula for calculating the margin is equal to total revenues minus total expenses. Agencies that provide funding opportunities through grants or contracts usually have a budget template provided in their funding application materials that must be followed when submitting an application. Example budget templates can be found on internet by using the search term organizational budget template. So details of each revenue source and each required program resource that generates expense in support of your proposed program must be described. In addition, a budget justification must be provided and that explains why each resource is needed and provides the assumptions and calculations that were used to generate dollar amounts for each line item of the budget. So, going over to task two, public health professionals are fiduciary stewards of the public funds entrusted to their organizations to improve public health. Thus, public health projects are subject to scrutiny by organizational leaders, funding agencies, legislators, and the public. So for a project to be defensible, it must be transparent, logical, and justifiable. So as a starting point, it should be clear how the budget ties to the organization's strategy and operational plan. If a new project or program is being proposed, it should have a business plan that provides financial, operational, and marketing details so that its costs and benefits can be assessed. If budget cuts are being proposed, or if a particular initiative risks not getting funded, you need to be very clear about the implications of the funding failure for what the organization will not be able to accomplish. You will need to explain the program cuts that will be required and what staff and other stakeholders will be affected and the impacts on public health outcomes and the line items in the budget that will be affected. Proactive approaches to defending budgets include documenting the value proposition of the programs and the activities. Given limited money and time, people, or other resources, and which program should receive funding. So methods to answer this question include benchmarking, calculating the return on investment, ROI, as well as economic evaluation. So benchmarking is a performance measurement process in which you find organizations that provide programs and services similar to yours and that are considered best in class in their processes and outcomes in delivering them. You then compare your organization's financial performance processes and outcomes against those of these external organizations. And this enables the organization to both continuously improve and by learning from top performers and to justify how your organization compares with those who are considered best in class. The ROI is a financial ratio that is used to measure program efficiency. ROI compares the costs of a program with the financial savings generated by that program and is calculated as financial savings from the program minus the cost of the program and then divide this by the cost of the program and multiply by 100. And so the higher the ROI, the more financial benefits is accruing from the invested monies. An ROI of less than or equal to 0% means that there is no financial gain from the investment in the program. In public health and healthcare, savings can sometimes accrue to an entity different from the one funding the program. Also, outcomes achieved through that were achieved through public health investments cannot always be quantifiable in financial terms. Economic evaluation considers both the cost and outcomes of a program, with costs in the numerator and the outcomes in the denominator. But how should outcomes be measured? Mm, There is a variety of economic evaluation ratios, each of which measures outcomes differently. The cost benefit analysis quantifies tangible and quote soft outcomes in monetary terms. Cost effectiveness analysis measures program outcomes in similar units across programs. For example, life years saved, rather than trying to quantify the outcome in dollars. Cost utility analysis measures outcomes by using a standardized morbidity or mortality and morbidity measure, often a metric called a quality adjusted life year. Budgets are not tools for accountants alone, and so they are tools for managers to ensure that they are using resources wisely and efficiently. And so budgets are estimates or projections of revenues and expenses. Thus, they must be monitored on a regular basis, for example, monthly, to compare planned revenues and expenses with actual revenues generated and expenses incurred. If actual performance is greatly different from what is planned, the managers must investigate reasons for the discrepancy and take corrective action. Um, the variance reports are monthly budget reports that compare the budgeted revenues and expenses with the actual revenues and expenses for each line item in the budget. The timeframes typically reported in a variance report are the budgeted and actual comparisons for the month to date and year to date for the current year and the previous fiscal year. Variance reports will often also include a column that calculates the percent variance to help the manager quickly assess whether the variance is positive, which is called a favorable variance, and where actual is better than budgeted, or if the variance is negative, called an unfavorable variance, where actual is worse than budgeted. Revenue percent variance is equal to actual revenues minus budget revenues um, divided by budget revenues. And the cost percent variance is calculated by subtracting the actual costs from the budgeted costs and dividing this by budgeted costs. In the next slide, we'll see a table that shows the layout of a typical variance report. So the manager needs to review the monthly variance reports to determine if corrective action is needed, and if so, where. And the manager must look at the variance in each of the revenue and expense line items to identify where in the budget the unfavorable variances lie. For example, are actual salary expenses exceeding budgeted expenses? Is there a problem in supply expenses? If some revenue is generated by fees that are generated by visits, is the volume of visits less than expected, and resulting in less fee revenue? And did some projected grant funding not come in because the organization was not successful in securing the funding? Similarly, if favorable variances are occurring, can the organization study the underlying reasons to identify possible ways to sustain this improved performance. And so various reports must also be reviewed for specific program or projects and budgets. So these variance reports must be tracked to ensure that funds are being expended as expected and by category, and that project fund balances are sufficient to carry out the promised scope of work and for the grant period of funding. In public health organizations, it is critical that restricted revenues obtained via grants or contracts and to carry out a specific scope of work be used just for those purposes. And restricted funds cannot be used to cover shortfalls in revenue streams or cost overruns for other programs. And very careful records must be maintained and to ensure that internal and external audits of the funds can prove that they were used only as intended. So this table shows the columns of data in the layout of a typical variance report. If financial resources become constrained, managers have two levers: grow revenues or reduce costs. Um, Reducing costs requires understanding the organization's cost structure. There are two ways to define costs. It's either you divide and categorize them into direct or indirect, also called overhead costs, or classify them based on whether they are variable or fixed costs. And these two different ways of classifying costs are important in calculating two financial metrics that provide insights into financial sustainability of a program. And these financial metrics are the contribution margin and the break-even point. And so let's talk about direct versus overhead costs. Costs that would not be incurred any longer if the program were to be stopped, and because the resources generating these costs would no longer be needed, are called direct costs. Examples of direct costs are a program staffing costs, assuming the staff would be laid off if the program were discontinued. Other resources are needed to support the entire portfolio of services provided by an organization. Examples include the salaries and benefits of the leadership team, the accounting, finance, human resource, housekeeping, and information technology staff, office computer costs, and building costs. For example, rent, heat, lights, and phone and internet. And the cost of these shared resources must be accounted for when one is creating budgets by allocating them to the various services provided by the organization or to the departments of the organization. So these costs are called indirect or overhead costs. These costs are incurred regardless of whether an individual program is discontinued or not. So there is a variety of approaches that can be used to allocate overhead costs to the programs being delivered. For federal grants, the overhead component of the project is typically called facilities and administration. And over to variable versus fixed costs. Variable costs are incurred only when resources are used to provide the services of the program. And if the volume of services provided decreases, then the variable costs to provide the services decreases. Program supplies, for example, are generally a variable cost. Fixed costs are costs that are incurred regardless of the volume of services provided. Even if the program provided half of the volume of services that was projected, it would still incur all of the fixed costs. Overhead costs are most often fixed costs, but direct costs could be either fixed or variable costs. If staff hired to deliver a particular program are paid a set salary, regardless of the volume of services they provide, then these staffing costs are fixed and direct costs. They are fixed and direct costs. And these staff are paid on a per unit of service provided basis, and then staffing costs will vary depending on the volume of services that are delivered, and they are variable direct costs. When providing services, it is important to compare the revenue generated per unit of the service with the variable cost per unit of service. This is called the contribution margin, and this is calculated as revenue per unit of service minus variable cost per unit of service. If the contribution margin is negative, that is if the unit variable cost exceeds unit revenue, you are losing money on each unit of service provided, and no amount of program growth will enable the program to break even. And we'll talk about break-even points and what it means soon. So this is not good. You cannot lose money on every unit of service you provide and stay afloat. And to have a positive contribution margin, either revenue per unit of service must increase or variable cost per unit of service must decrease. If your contribution margin is positive, and that is the unit revenue exceeds unit variable cost, then the program is making money on each unit of service it provides. This means that your total revenue is exceeding your total variable cost, and this is something good. But is the program generating enough money to also cover its fixed costs? And that's another important question. And this is what brings us to what is called the break-even point. And break-even point is calculated as total variable cost plus total fixed costs. So if the program's total revenue is less than the sum of the program's total variable and total fixed costs, then the program is not breaking even, and that is, it means it's losing money. And so algebra can be used to calculate how many units of service must be provided to cover a program's fixed costs in order to break even. So these two financial metrics, contribution margin and break-even points, help managers identify how much additional revenue must be generated or how much fixed or variable costs will need to be decreased if financial viability is to be maintained. So financial sustainability requires revenue streams to support the work of an organization's mission. Revenues for public health organizations can come from a variety of sources, including government appropriations, federal and state contracts and grants, and foundation grants, direct provision of services for which payments are received, and philanthropic donations from private companies and individuals. And thus, a portfolio of revenue streams must be managed for public health organizations to be successful. Federal dollars that support public health services and programs flow through federal agencies to states and local health departments and other public health organizations. And this funding can be one of several different types. Block grants are relatively large sums of money that the federal government passes through to states, and with the states having broad discretion on how they can spend the funds. Categorical funds, on the other hand, are restricted to being spent on specific programs or initiatives. Some categorical funds are distributed as grants based on pass-through formulas, for example, infant mortality rates, and while other categorical funds are competitively awarded for specific projects through a grant application process. Funds from states, county or city governments can include those allocated through an appropriations process through formulas to fund public health agencies for specific services, or through a taxing mechanism, for example, local property tax line item that allocates funds to local public health agencies. Community foundations and organizations also fund public health activities, either through direct donations or through a competitive grant application process. For public health organizations that provide healthcare services, funds can be generated through billing recipients of the services or their healthcare insurance providers. Reimbursement methods can either be by capitation or fee for service. Capitation means the service provider receives a certain amount of revenue per person enrolled per person period, typically per member per month, regardless of the volume of services delivered to each person. Fee for service payments can be either retrospective or prospective. In a retrospective fee for service, the service provider is reimbursed on the basis of their prices charged, or a negotiated discount rate to the charges. So with a prospective payment, the service provider may be paid a set amount on the basis of the diagnosis of the patient, regardless of the cost of services provided, on a per day, that's per diem basis, or on a per procedure basis. Public health leaders need to understand the mix of revenue streams that support the organization's work and the sustainability of their mix of funding sources. So funders can change their priorities, which can result in budget cuts or loss of funding for core programs. And when revenue shortfalls occur, managers must make hard decisions that are consistent with the organization's mission. So these are examples of types of costs um, based on the two ways of classifying them. Organizations that sustain themselves for the long term excel at the intersection of knowing what they are passionate about, and that is being mission driven, and what they can be best at, and the financial or business model that will sustain their work. So a key to success in funding and in seeking funding is to understand the work and activities that are central to an organization's core mission, and to seeking funding for that work. If a funding agency is soliciting proposals in an area that is not part of the organization's core missions and competencies, it is not in the best interest of the organization's long-term viability to chase that funding opportunity. If it does, it risks losing its ability to focus on and execute what it does well. Sometimes part of the scope of work requested in a grant opportunity is an organization's core competency, and while the remainder is outside of its competency. So in this situation, it is important to develop partnerships and collaborations with other community organizations to seek funding jointly. There are a number of online resources that describe how to write proposals to federal and state agencies or private foundations to seek funding support. Each funding agency or foundation has its own requirements for the outline of a grant proposal and requirements for submission. A typical format will include an introduction, a statement of problem that your project will address, a narrative description of your proposed project, and the goals of the project, and the measurable objectives and the outcomes of the project, the evaluation plan, and the timeline of the task and deliverables, and the budgets and budget justification for the project. Federal government agencies require a number of registration steps to submit proposals. Federal government funding opportunities are posted on the website grants.gov, and state agencies with funding opportunities can be found on their respective websites. A comprehensive database of private foundations is also available for a subscription fee online, and public and university libraries may have a subscription so that organizations can access it for free. When researching potential funders, it is important to talk to them to describe your initiative or project. And this will ensure that you are identifying the potential funder whose targeted funding priority areas are the best fits for your organization and your intended program. Funding opportunities to which organizations can apply may be either contracts or grants. Contracts are legally binding agreements used by government agencies to procure services in support of activities that the government wishes to carry out. The agencies describe the required scope of work, the timeline in which the work must be completed, and the specific requirements and deliverables and its products that must be met throughout and upon completion of the contract. And so the agency solicits bids from organizations to complete that scope of work and abide by the requirements. And so contracts often require detailed reporting and accounting of expenditures, as well as adherence to strict timelines and milestones. So failure to deliver under a contract can have potential legal and financial consequences for all parties. In contrast, the specific details of the proposed idea and the scope of work for grants are developed by the organization seeking the grant funding. And so generally, grantees have more freedom and flexibility in how they use the funds and the scope of work, and as long as they meet the general goals of the grant and the funder. And so grants often require periodic reports on progress and outcomes, but not necessarily detailed accounting of every expenditure. If an organization is awarded a contract, it is legally obligated to conduct the scope of work as promised or agreed upon for the agreed upon contracted financial amount, and must file frequent reports as specified in the contract regarding the completion of the promised scope of work. If the organization does not fulfill the scope of work as delineated in the contract, it may be subject to legal action or financial penalties. One federal agency often involved in soliciting contracts for work related to public health is the US Department of Health and Human Services, which includes the Centers for Disease Control and Prevention, CDC. So their websites describe the contracting process and the post-contract opportunities to which organizations can apply. Other examples under the US Department of Health and Human Services includes the Health Resources and Service Administration, HRSA, and Maternal and Child Health and Block Grants, which require recipients to track and report on specific outcomes and performance measures. Public health organizations typically have a myriad of programs they offer concurrently to a variety of different stakeholders, clients, and the public. In addition, there may be other organizations that provide similar or complementary services in the community. And so organizations must look both internally and externally to ensure that they are leveraging existing resources to carry out their work. Internally, organizations need to keep their overhead and fixed costs as low as possible in administering their portfolio of programs. And externally, organizations need to partner with other community organizations who are doing similar work to fully leverage the potential scope and reach of their programs. So collaboration and partnership is key. Health programs require a lot of resources, and numerous programs are competing for these resources. A variety of strategies are needed to ensure the sustainability of the health program. First, a necessary but sufficient condition for sustainability is that the program is evidence-based and effective, as demonstrated by both formative and summative evaluation with identified goals, objectives, and metrics. Second, quality management principles, which we shall discuss shortly under task 11, must be in place to ensure that the programs are continuously monitored and improved upon, both in terms of the process, for example, who is served and how they are served, and the outcomes as measurable effects of the program. But sustainability requires more than this. So studies have documented that there is a variety of factors that may affect program sustainability, including program evaluation and adaptation, public health impacts, strategic planning, political support, funding stability, communications, partnerships, and organizational capacity. Sustainability assessment tools are also available to help guide managers in sustaining their health programs. It is important to address issues of sustainability at the outset of any program, as many funding agencies require a sustainability plan in their grant proposal applications. Implementing, evaluating, and improving programs to improve the public's health requires successful execution and continuous improvement. In addition, much of the work in improving the public's health is accomplished through collaborative teams. Hence, effective team management and teamwork are crucial to successful program implementation, evaluation, and improvement. So program collaboration and partnership describe how to successfully engage stakeholders and community partners and others in collaborative efforts and partnership, and we've talked about this in a lot of times in other lectures. High functioning teams do not happen by accident, and teams go through stages of development as members are brought together to achieve a goal. And these stages, known as the Tuckman's stages of team development, include forming, storming, norming, performing, and adjourning. So relationships must form among team members, and conflicts and cliques may occur as the team begins to focus on its tasks and goals, and team leaders must work on helping the team develop trust, support, and group identity. And once that occurs, the team can achieve peak performance. So allowing time for the forming stage and for team members working on public health issues is particularly important, as team members are diverse in terms of professional background, sector of the community, and race and social class. Effective teams also require effective team management techniques. And these techniques include methods for running productive meetings, generating effective discussions and decisions, creating effective record keeping, using team roles, for example, project leader, meeting leader, timekeeper, recorder, and executing through effective planning. Effective team performance also requires holding yourself and your team members accountable. So this requires ongoing evaluation of both team performance and individual team member performance. Both qualitative and quantitative methods can be utilized. The team leader needs to continuously observe both whole team dynamics and individual team members' behavior or performance issues and know how to conduct productive team or individual private conversations when issues arise and that need to be addressed. The purpose of these discussions is to give feedback that helps the team and team members grow professionally and personally. Public health agencies are increasingly using quality improvement tools and techniques to systematically study and improve their programs and their activities and all their efforts. And so QI uses continuous, repeatable, defined processes and measurement methods. A common QI framework used in industry and increasingly in public health is the Plan, Do, Study, Act process and PDSA process, sometimes called Plan, Do, Check, Act. And so the study phase of the process focuses on measuring program impacts, trends, benefits, and unintended consequences. So PDSA is a continuous change management process that complements the steps of the logic model and the proceed model. As shown in the Baldrige Performance Excellence Framework, which we mentioned at the beginning of the lecture, monitoring and evaluation also require a data management system with clearly defined process and outcome measures with accompanying processes for data collection and knowledge management. Plans and programs to improve the health of communities are increasingly relying on collaboration across community partners spanning diverse sectors such as education, healthcare, public health, city planning, and economic development. As such, implementation competencies span traditional project management skills as well as backbone organization roles. Project management competencies include both people skills and technical skills. And people skills are needed to build trust and promote communication across stakeholders. Technical skills include seeing the big picture and down to developing detailed implementation action plans that describe the scope of the work to be completed, deliverables, tasks, assignments, timelines, and due dates. Flowcharts and Gantt charts are examples of QI tools that are frequently used in developing implementation plans. And flowcharts visually document the sequential order in which the activities are to be carried out. And Gantt charts use horizontal bar charts to visually represent the list of activities that must be completed with the timeline of when they will be completed. So the Project Management Institute, PMI, is a professional organization that supports certification in project management called the Project Management Professional and PMP certification, which is great for public health practitioners to obtain. The successful development and implementation of cross-sector community plans and programs are often supported by a backbone organization and that provides the infrastructure and the know-how to convene and coordinate the ongoing collaboration and evolving initiatives. And there are 6 functions of a backbone organization, and these are guide vision and strategy, and support aligned activities, establish shared measurement practices, and build public will, advance policy, and mobilize funding. Thank you so much for watching, and I'll see you in the next class.